The market that we've been living in up until things started to shift, right, where everything's high and to the right, you see a race to the bottom. And there's a lot of pressure on everyone to cut what they charge their agents to get down and be the greatest value for an agent to come and hang their license with them. And yet what we know is the race to the bottom never works, right? Is ultimately, if you're not profitable, it's not sustainable. And now, as you said, right, the market is contracted and we're seeing companies look and say, okay, yeah, this is not working for me. In a high volume market like we were in for the last 12 years, literally, it's where you see the proliferation of discount brokerages, people cutting their fees, right, to get inventory because they know it will sell. People going for sale by owner. And yet when the market slows down, that becomes less attractive to everybody. I think we're getting back to reality, actually. And I think this is actually a good move. And I think you're going to see more and more of it as everybody grapples with profitability. Investors currently hold around 30% of all the housing that's out there. Now, the vast majority of those investors are not these big mega hedge funds, right, that buy thousands of homes, but instead they're mom and pops, right? Mm-hmm. Single investors who own a house or two or three or 10, not own thousands. So again, it is a large percentage of the market overall, but it's not what that article claimed, 44%, certainly not this year.
Yeah, I love that stat, Bruce, because I think there's real opportunity there for the real estate agents listening to this, right? So just to be really specific here on what this is measuring, it's basically saying that last year, almost a third, 30% of all purchases, not what's owned, purchases were purchased by an investor, mostly mom and pop, people like you, people like me, people that exist in every agent's sphere of influence and want to buy their first investment property, their second, their 50th, it doesn't matter. 30% of all purchases. So please don't ignore the opportunity that exists in your business today and tomorrow and forevermore in helping people build wealth through owning real estate, right? And we've talked about the amount of equity that homeowners have right now in the marketplace. 39% of homeowners owe nothing on their house. Those are would-be and will-be investors given this statistic. So, almost 1 in every 3 purchases is an investor. You have to learn how to work with investors, and the majority of them are just like you and me. And that's real opportunity, Bruce, even in a challenging market.
The Fed is trying to slow down the economy. And if you think about that, what does that mean? Well, it would mean that unemployment would go up, that job growth would slow down. Oh, by the way, GDP, which we reported recently, right, is just off the charts hot right now. But that would also shrink and get back to that 2% level. And we would see that ultimately drive inflation down. Of course, the latest inflation numbers came out and they came out at 3.1%. So barely moved at all from October. And, it's sort of remaining a little stubborn, to be quite frank. I think that all of this information that's coming out, and of course we record a little earlier to get this podcast out, but at 11 o'clock Pacific today, Wednesday, we will hear from the Fed what they're going to do. And of course, everybody's expecting that they won't raise rates, that they will keep them. But I think that what we're going to see here, Chase, is that they're not going to cut them either. And I don't believe we're going to see them cut them anytime soon because of these numbers being stubborn.